Well, good morning, everyone. Welcome to our Thursday morning trading session. It is Thursday, isn't it? Yes, it is. Here, hold on one second while I share my screen with you. Still just doing the final touches on the trade manager here. Loading it onto my charts, and we'll throw the Trailblazer here onto the Raptor. Not much of an opening gap this morning. Price is pretty much taking over from where they left off yesterday. Or after yesterday's rebound, I should say. Prices finally bottomed out in the NASDAQ as well as the rest of the stock market. So I'll just throw in the trade manager here now on my gold and crude oil charts, and then we'll be all set to go. Okay, good question here from Brian right out of the gate. Brian's asking about the support and resistance lines. He says, Eric, do you pay more attention to one line over another? Yes. I think the three most important lines on here are these three. The gold line, which is the median line, and then the primary resistance and the primary support. Those are the lines above and below the median line. Brian asked, do you avoid taking a trade if you're near one of these lines? No, I don't avoid it so much, but I'll use it as a confirmation tool, or even as a profit target. So now that we've broken down here below the median line, we're going to have a slightly bearish flavor on the day. And knowing that we've bounced off of here, you see, we'll go with the click target. So we're going to get a signal, and let's see if I can't set it up. I'll risk it just to there, and I'll take my profit to there. And let's eliminate the break even here for a moment. So this is the way Omar Al-Tuki likes to use the lines, is he'll use them as profit objectives, he'll use them as confirmation tools. So like I said, knowing that the market has traded through the median line, kind of come up underneath it and bounced off of it, it gives me a little bit more confidence with this particular trade. We've since hit our break-even trigger and our first profit target, but you can see I'm going to use the primary support here as a profit objective. And if we can get going a little bit further here, I'm going to enable maybe the parabolics. Oh, those are a little bit cozy. Maybe we'll stay with the ATR for now. Oh, I'm fiddling around too much with this. The market's already made a little bit of a retracement. We'll see if we can ride this out a little bit. But that's how I use them, Brian. So just because the market is, let's say we generated, here, let's close this out. Let's get this out of the way. Okay, so let's say we were looking at this signal right here. And we're trading right on the median line. Would I avoid that signal just because we're on the median line? No. No, this is technically our trend change signal. What would give me pause is that we're trading away from the trend line a little bit. So it's the fact that the signal generated away from the trend line usually means that we may bounce into the trend line and then head a little lower. So when I'm structuring this trade, I might try to give myself a little bit more room on the exit side, just in case it tries to reach back a little bit. Now, if it's going into the primary resistance or the primary support, let's get back here where we're going into the primary resistance. Okay, so we've got a late filter entry signal, and we're going into the primary resistance. What I would tend to do here is I would probably, while I may not avoid taking the trade altogether because, hey, this is a late filter entry signal. I know it's a high probability signal, right? The trend line never changed color. The filter goes out of sync, comes back into sync. But maybe I'm going to, look for a second push on the entry. I'll probably enter above the highs. I may even enter above the high of the primary resistance if it's not too far away. Now, in this case, it is too far away. So what I would try to do is I would try to limit my risk exposure to a single contract. Now, given the parameters of the NQ, I'm trading a single contract regardless. But that's how I would treat it. I wouldn't necessarily avoid the high probability signal just because we're near a support and resistance zone. But it would come into consideration. So here we are, we go, you can see the market waffles a little bit, and then we finally get our support off of the primary resistance and hit our profit objective. So I hope that makes sense. But that's an excellent question. I suppose the final factor is always price, right? Because price is truly the only thing that's going on this chart. The trend lines really aren't here. The support and resistance lines really aren't here. Those are all mathematical algorithms based on price. So, let price be your final decision-making criteria. Let's base it on that. All right. So let's see, how are we doing here out of the open? Looks like we're waffling a little bit. So market opened up. Oh, actually, where did we open up? 630. Oh, we've traveled a lot already. I thought this was our opening range here. No, we've already come down, established a low. Now we're up here. We seem to have established a little bit of a high. Just curious to see where we are relative to yesterday's trading. So this is the overnight. Overnight was very, very busy. My goodness, a lot of trading going on in the stock markets the last few days. The increased volatility, while it's no fun for the average investor, or investor, I mean buy and hold type investor, certainly makes our days a little bit more interesting. Okay, so it looks like prices have been within this range previously. I just didn't want to get into a situation where we're overlapping a lot with price. Because when price is overlapping, well, hey, guess what? You're in a trading range. Good question here from Richard. Boy, you guys are full of good questions this morning. Um, Richard asks, if I trade the Eagle, should the targets be set at $200 even if you use a 12-tick brick or a 6-tick brick? Yes. The Eagle is generating your trend signals. So you can see the follow through tends to be a little bit greater most times. So you're going to set your targets at $200 regardless of the brick size. Now what happens if you go with a 6-tick brick, and here we may as well do that while we're letting the dust settle a little bit here. What happens when you use a 6-tick brick, and I think we're going to see the market tail off here again. Is that you're going to end up generating a whole lot more signals. Come on, here we go. All right. So here's the 6-tick brick on the NQ with the eagle. And, you know, the signals are just going to be more plentiful. So here's a rule of 3 signal that developed. Here's a trend change signal that developed. But here's the problem when you're using a smaller brick is because you're generating more signals, sometimes you're going to throw one in there, or you're more likely to throw one in there that isn't going to have much follow through. So here's red bar buy. If you took it right on the hash mark or just over the high of the signal bar, you would have been filled. It looks like this particular bar got 1 tick higher and then the market reversed on you. But the signals are still the same. Here's a green bar sell, which had very good follow through. But yes, I would be taking the same $200 profit objective. Now, having said that, I've mentioned this before that you don't need huge profit targets. By that I mean, you know, we've done the math where what you really need is a $50 winner twice a day, or one $100 winner. Right after that, it becomes a matter of math, where you know, if you take one contract, you'll earn, you know, approximately $20,000 a year. If you take 5 contracts, you'll earn $100,000 a year. So it's not so much capitalizing on more and more signals as it is finding a signal that you know you can at least get some profit out of. And Brian asks, what about the same question on the Raptor? Yes, same answer. Use your $100 profit objective, whether you're using an 8-tick brick or a 12-tick brick or a 6-tick brick or whatever it is you choose to put up there. The parameters themselves don't change that much. But, you know, there's a lot of comfort in just grabbing your short-term targets also. Here we'll, to that effect, we'll even lessen the profit objective on the Raptor this morning. So let's see, are we getting anything going on here yet? Well, we're kind of at the bottom end of this trading range. We did make a lower swing high. We're kind of hovering here off of the cloud. 1, 2, 3, 3 bounces coming into this morning's lows. Just waiting on a little bit of structure here. So Brian says, so that would be a 10-tick target on crude oil since it trades at $10 a tick. So our high probability profit targets are $50 for the Hawk, $100 for the Falcon and Raptor, $200 for the Eagle. So if you're trading crude oil, well, it trades at $10 a tick, so a $50 target is only 5 ticks. A $100 target is, yes, correct, a 10-tick, and a $200 target would be 20 ticks. Crude oil, because it tends to be more volatile most times, I will double the profit objective. But the high probability targets remain the $50, $100, and $200 objectives. Crude oil very sideways this morning. As is gold. Gold kind of moving sideways this morning. The NQ is the only one that's going anywhere, and right now it looks like that direction is down. bar, it was down. Now we're getting some yellow bars coming through here. We're actually getting a trend change signal here on the Falcon. Okay, here we'll take a look at this. Now, the things that you want to pay most attention to when you're entertaining the thought of a trend change is, have you seen a retest of the lows? Right? A huge, huge, huge downtrend. We don't want to get silly and start buying just because, you know, we have a trend change signal. We need to see those tests of the lows, and then we can buy, or it will be a little bit safer to buy. Now we've kind of seen a minor test of the low here. So here's the low, the market comes up, kind of tests the low a little bit, and the buyers are fighting it up a little bit, tries to come down again, and now it seems to be holding. The signal was actually printed right here. This was our trend change signal. But even off of that signal, I would have taken this high into consideration. I would have entered above there. The nice thing about doing a counter trend signal is that you can always cover below the low. When you are doing counter trend, I would recommend, though, only using a single contract, especially when the market has a strong trend. Because the fact of the matter is, if the market has an established trend, and here, we'll do this right now. If the market has an established trend, it's actually, you could just sell the market blindly, and you'll almost always have a better chance of making a profit than if you try to counter trend position. Now watch, this is the time it's going to make a liar out of me and bottom out. But if you have a solid trend, as we do this morning, like I said, just randomly selling with the trend, you will usually have a better chance at profit than if you try to finagle some sort of counter trend trade. So here, let's, for demonstration purposes, we'll throw a stop in here. There we go. Nope, no, now they're going to tag me out. I didn't get a chance to move my stop back, but you get the idea. So let's take a look at how this is forming now. We've got a retest. Now we're working on a trend change signal. So we've got the up, all right, we're kind of broken the highs here. Let's see if we come back now with a down. So here's the down. Now what we're looking for is we're looking for that up. And here we are off of primary support. So we're flashing a green bar. We were flashing a green bar. All right, so there's our warning dot. All right, so I know it's going to print right about here. I want to cover below the low. So we've seen the market find support here, found support here, found a little bit of higher support here. We are kind of rebounding a little bit off of the primary support line. I'm only running a single contract because this is obviously counter trend in a pretty strong downtrending market. We don't know whether the bottom is in just yet, but I do know if the market trades below this low right here, I'm definitely on the wrong side of the trade and it'll be time to go. The thing, probably the worst thing about counter trend trades is when you're in a counter trend trade, it makes it impossible for you to take a with trend signal. That's why I think the primary reason why I avoid taking them. You know, here it would be this little trend change signal right up here. Oh, see, and they did continue lower still. So there again, you know, just a blind sell would have yielded better results than trying to do that little funky counter trend move. Hi, Tony. Tony says, good morning, Eric. I was not in the room Monday, Tuesday, Wednesday. How did you make out yesterday? Well, yesterday was actually the open house room. And because the market was moving so fast and I was trying to demonstrate some of the software, I actually got caught a little flat-footed on a few trades. I would set up the signal and then the market would bolt and I would be left holding my open order. So not as good as I had hoped, although Monday, Tuesday were both very good days. Or Monday, the market was closed. Tuesday was a good day. All right. So let's see how we're doing here now. If we can get the market to kind of put in a little bit of a bottom, a serious bottom, I think we're going to see the buyers step up here somewhere. Not that I'm overly bullish today, don't get me wrong. I do my best not to impose my opinion on the market. Not as easy to do as it sounds, because we all have opinions of what the market should do, but I find when I get stuck in my opinion, bad things happen. All right, so looks like we're generating a rule of three type signal here on the Eagle. Signal's not complete just yet, but we're getting close. Oh, the Raptor is giving us a soft edge buy, but here too, we want to see a good test of the extreme. I don't think we're going to get it. Let's see if they'll come back here one more time, and that will make it a cloud crossover. That will be a little bit more interesting to take a cloud crossover. Oh, and here the Falcon. See, this is what it was like for me yesterday, Tony, because it was moving so fast. I get around to showing these signals. Here's a late filter entry signal. Trend line doesn't change. Filter goes out of sync, comes back into sync. And by the time I get to it, it's already moved and hit its profit target. And of course, we've got stuff going on here in the Hawk as well, where we've got our first micro macro cross, macro pullback, and 4 arrow consolidation all smushed into one. I needed a few more days of data there. My day ranger is not displaying correctly. There we go, that's better. All right, so we're definitely in buying mode now. And let's see if we can't pick up another signal here. Oh, come on now. Oh well, hazards of a trading room moderator, right? Trying to point stuff out, you sometimes get left behind. All right, well, we might get a chance here. We got a macro pullback going on in the hawk. Oh, and that one's since moved into yellow bars. So I'll take the yellow bar, but only on a 4-arrow consolidation. The raptor looking to come back into the hard edge, as is the eagle. Now we're working on a trend change to the downside again, so very interesting start to the day. Yeah. Oh, good morning, Jim. Oh, funny thing is, Jim just gave me some advanced decline numbers here. The market's actually fairly even up as far as the buyers and sellers are concerned. We've got, what does he say, 326 on the buy, 1451, or sorry, 1326 on the buy, 1451 on the sell. That's a very balanced market. Yeah, Jim says you need big stops today. That's for sure. He says he's running a 30-point stop, and that's definitely sounds about right. So here we've got a nice bounce off of the primary. All right, let's see if we can't get a signal. Come on. Oh, you guys, you. Oh, see, I'm looking away and we get a first micro macro cross and a trend change signal. I'm really starting to tick myself off here. All right. Well, we're seeing a little bit of a rally. I think they may try to press into this morning's highs. Sorry, guys and girls. They're still pressing. Okay, well, here's a macro pullback. We're a little late in the day on this one. Oops. And of course, it has since bolted. But this is what the macro pullback is looking like. It comes into the macro line, trend line changes color. Nice little move there. Quick little hit and run. See, this is how the $50 targets add up, right? This is a short little $50 move, and yet even with a little swing like that, that's a $200 move. Now, admittedly, it would be a little bit harder to do here on the first micro macro cross. I would be looking to probably cover down there, but nothing wrong with that. If you wanted to, try to increase your profitability on the trade, you're going to have to run a tighter stop. But really, if you can do that a couple of times a day, and as volatile as the market is today, that doesn't seem to be that difficult to do, in spite of my attempts to get into a trade here this morning. It's easier if all you have to do is focus on the chart, right? So here's our late filter entry signal, very high probability signal, a signal that I don't mind taking a tighter stop on. Why? Well, because I know there's going to be good follow through on that. So here between the Hawk signal and the Falcon signal, we've potentially banked $500 already. And a very nice, strong move off of that last bounce here by the marketplace. And lo and behold, we've traded right back to the median line. So what a fantastic little move that was. Huge ranges today on the NQ. A lot of fun. Love trading days like today. Oh, well, Jim says he got he got caught on the wrong side of a trade this morning, and he was down 180 bucks, but he's back at break even today. Well, that's nothing to sneeze at, Jim. Well done. Here's a little tip from Jim. He's using the equivolume bars. He says if you mark the highs and lows of the equivolume bars, he'd be referring to the fat ones, I'm sure. He says they make a good buy and sell zones, at least for scalp trades. Good little tip. Okay, you can see we're getting a little bit of sideways action going on now. Now we're testing the top end of the trading range off of a double pullback. And my signal has since tripped. Let's see, do I have another signal going on here? Oh, we are getting a first micro macro cross, which has now moved into yellow bars. So a lot of yellow bars creeping up here. It's making me think the market is perhaps losing some of that initial momentum. All right, here's another first micro macro cross. Oh, into a macro pullback into yellow bars again, into red bars. So you can see why we tend to avoid the yellow bar signals. Crude oil also putting in a moderate rally. And here we are again with the hawk. Now we've got a green bar sell. We should anticipate a test of the extreme, but it might be easier to buy this one after it runs away on me. So the green bar sell is a signal that you can trade either way, right? Usually I'll go with trend if I'm anticipating a test of the extreme, a test of the lows, in which case my trade would look like that. I do tend to dial the risk back a little bit. I'm not sure I would, because it tends to be a weaker signal, I don't always throw in the full amount. But at any rate, you can see the market came down a little bit and started to reverse on itself. The beauty of the green bar sell is that you can also use it as a counter trend signal by buying above the high of the bar. Took some heat on that, but it does look like we did hit our profit target. Now the thing with the green bar sell is you can always use it just as an early warning, because the green bar sells, if they stick, they inevitably work into a first micro macro cross, or in this case maybe a macro pullback. But we're seeing a whole lot of choppiness going on right now. Oh, and there's our little macro pullback signal. I'd like to get a raptor trade going on here, but every time I look at it, the signal just tripped. Here was a nice little hard edge bounce. I'll show you why I think this one is a little bit stronger though. Just the way it's setting up, you can see we made a deep move here into the second band. That also generated a nice signal right here. But then we came back and we hit the first band. But look, we've made a higher low, right? So that tells me that there's upward momentum. Did we break this high? Yeah, we broke that high too. So we're still making a higher high. Now we've made a higher low. And that just tells me that the buyers are still in control here and that it would be worth putting a buy signal on. Unfortunately, I'm a little bit late for that, but that was an outstanding little move right there. So hopefully somebody was able to get in on that one. That's what you want to look for when you're looking for these signals, when you're watching these hard edge bounces, is, how are the highs and lows relative to each other? That's what makes it easier to take one over the other. agree, Jim. Jim says we got a whole bag of mixed signals here this morning. They're all over the map, and that's true. So we're back to the highs of the day, which no doubt accounts for a lot of the choppiness that we're seeing. All right, let's see if we can't get a decent trade here in the next half hour or so. Boy, the buyers are pressing hard. Yeah, oil too. Jim says oil's pressing really well, and here's crude oil on the hawk, and you can see a nice little first micro macro cross signal here. Same kind of thing though. We've got a red bar buy, which I wouldn't have been all that keen to take given all the yellow bars preceding it. But we have a red bar buy that had good follow through, and then that comes right back with a first micro macro cross. We are making higher lows, which does suggest that the buyers do have control of the market. This high would be problematic to be sure, but hey, that's why we use the risk manager to try to control our risk exposure. And the market had no trouble whatsoever getting above there. Oh, actually, I think today is crude inventory, isn't it? But that's not until 11. Okay, things looking a little bearish again. Note the test of the extreme, the test of the highs. We may get a soft edge sell signal here. And I've been telling you don't go counter trend, and I know this is counter trend. Oh, a really good retest of the highs. If this fails here, if the highs dig in and we get a sell signal, that would be a very nice shorting opportunity. I think we're near where the market left off yesterday here at this 41.60, 41.70 area. All right, well, we can put that away. I think what makes it harder today too is the speed at which everything is unfolding. You don't have much time to really think about anything. let's take a look at this Raptor. So there's our sell signal here on the Raptor. And they're not going to let me bring it in. I'm going to do a little cheat here. So what I've done is I've just simulated shorting this signal right here. Now, you might be wondering, well, Eric, you've just made a higher high. How is that a test of the highs? Well, it's kind of a premature test of the highs. The fact that you see what's going on here is if you look at how the market is behaving, we've had a very strong move up, another move up, another move up. The angle seems to be good, but the legs are getting a little bit shorter. And what happens after that? The market goes sideways. And then we have the market move up, the market move up, the market move up. See how we're starting to drift a little bit sideways here? Here, look at how the market was advancing. Up, quick little down, up, quick little down. But they weren't going sideways yet, right? They kept advancing higher and higher and higher. Then they go sideways. Compare that to what's going on here. It goes up, yeah, strong move, up. Oh, but this move, all of a sudden, we're not getting as high. Which is leading me to believe that we're going to see that soft edge sell and perhaps a move here into the hard edge. I don't want my stops too tight here because, see, we're in the sideways mode now. I don't know whether the market's going to move. Because I'm being a little bit overly aggressive, the market may try to get up here to the highs again. And ideally, I want my stop just above the high of this bar right there. So here we go with our, hopefully, our final retest of the highs. Come on. Like I said, this is a very risky proposition because we don't have a whole lot of market structure here yet. I'm looking at the momentum itself and thinking, all right, well, if they're going to head lower, this is probably the place they're going to do it. Look at the buyers digging in, though, just chewing through those buy orders. All right, sellers, where are you? Well, the buyers are still really, really strong. Oh, see that? I don't want to see. I don't want to see the buyers digging in. Ah, there we go. Come on, sellers. All right, so this is the final attempt now on the part of the sellers, right? They made a run to the high. Final attempt on the part of the sellers to move the market lower. I should be getting more aggressive with my stops now. So I'm going to enable my bar high low. I'm at break even, so I'm going to hit the break even trigger. And we'll go 2 bars off. And we'll see if we can't pick up a little bit more profit here. It's going to be tough because you can see we've got, loads of support on the way down. Where are the buyers going to dig in again? Well, it's hard to say. But all right, the Geiger counter waffling a little bit. I was going to say that the sellers had swung over here and held the market pretty hard, but not just yet. Come on, sellers, chew through those orders. There we go. There we go. They're trying to chew through some of those orders again. And where's the support and resistance suite? Let's see where they may end up. 41, 34, 35. Does that seem plausible? Yeah, I think that's a fairly reasonable target. The buyers really trying to get some traction here now. Come on, sellers. There we go. Bring that dial over. See, let's click that dial over there. Come on, swing it hard to the downside. Well, we're doing pretty good with this one. What are we up? Oh, very nice. Almost $400 in open profit at the moment. This is where the bar high low is a great little stop strategy, because if the market shows you any kind of weakness whatsoever, it stops you out, takes your profit. Hooray for us. Now, you did have a second chance to get in on this particular trade off of this test right here. This was actually the better soft edge sell. So the market, remember, soft edge sells, which is essentially the counter trend signal on the Raptor, but it does have very good follow through, which is what makes it so tempting to do. Soft edge sells need to be preceded by a test of the extreme. So we had a little test of the extreme right here for this soft edge sell, the one that we sold, or that I sold. But we had yet another soft edge sell signal after a better test of the extreme. It actually even gave you a better entry signal. And then, of course, that's when the momentum really kicked in. So the soft edge sell, very tempting trade. It's a fairly easy trade to take on the Raptor. Just make sure you have that test of the extreme going into it. Otherwise, you're asking for it. And not in a good way. All right, looking for a little bit of buying action to come back into the market now to offset that larger move to the downside. Yeah, Jim says you have to think and act like a robot, but at a very fast pace. I think, you just have to be choosy. When the market moves this fast, as it has yesterday and today, don't worry about taking every single signal. Don't even worry about missing signals. There's going to be a lot of signals today. I think what you want to consider is, teeing yourself up for the stronger signal. Just look at your chart, step back, look at your chart and say, okay, well, what's going on here? What do I see? Ooh, sorry, almost sneezed in your ear. We've got a market that started the day in a strong downtrend, then had an equally strong uptrend. Now we're trying to fight our ways back down, and it looks as though the buyers are trying to recover. So a very, very telling area here. Are they in fact going to try to make new highs today? All right, possible late filter entry signal going on here on the Falcon. So I'm watching my trend line, making sure my trend line's not going to change color. I've already got the warning dot. Oh, I had the warning dot. All right, so there's the warning dot. I know if this bar finishes at the high, my filter will flip over, which is what it just did. I'll take the trade above the high there. Oh, I would have rather gone in here with just a single, but oh well, whatever. Why a single, you ask? Well, we're trading, near the highs of the session, and this market has been very whippy. And now you see why a single would have been preferred there. This is very odd for a late filter entry signal not to work like that. It's such a strong signal most of the time. Well, sorry about that. It does appear as though the sellers are going to be in control here. But you see how we're starting to get all this sideways action again? How the market is, just overlapping, trading within its range? That's never any fun. That's why we're not getting any follow through here. It's much easier trading when, we have this kind of scenario. Compare that to what we're looking at now. It's much easier to make sense of this than it is trying to make sense of this. Yeah, we're getting some serious range going on. Check out our hawk. Look at the yellow bars cropping up here. Lots of overlap. They're just pretty happy at this whole 4150 area, I guess. All right, they're trying. All right. Looks like they're going to put in another push higher. We're just flirting with the contract highs, or contract highs, daily highs. Daily highs being right here, around 41.64. All right, come on, don't stop now. They are too. Our macro pullback signal here, which I was watching for a second, got spoiled by this yellow bar. And now actually we're into a red bar buy, or we were into a red bar buy momentarily. Come on, give me that red bar buy. What I'm looking for now that we've, got this great big trading range is perhaps a retest of the high. No, not getting the red bar buy. Actually getting a first micro macro cross lower, which is, a high probability trade to be sure. I want to risk it as far back as possible because of this trading range. This trading range is making things very, very difficult today. All right, there's just a single on here. Let's see if we can't sneak it out a little bit further. Get to that break-even trigger. All right, so we've hit our break-even. We've hit our profit objective. I'm just going to see if we can't massage this a little bit lower. There we go. Oh, baby. No. All right. Well, they tried. They're testing the bottom end of this big old trading range now. So the top end right up here, the bottom end right down there. Had a trend change signal going on here on the Falcon, which also had some decent follow through to it. And a hard edge bounce, and maybe even a red bar buy here on the Eagle. We haven't looked at any Eagle trades per se this morning. If we throw a trend line across the bottom here, it looks like we are getting a little bit of action off the trend line. So here's our signal. Doggone it. Let's see if I can't get it on a second push. So the signal bar actually flipped over and synced up with the ATR, giving us a little bit more confidence with the signal itself. I'm not liking that I'm printing two signals here, contrary to the band. That smacks of a trend change signal, a rule of three type signal, I should say. Very, very important area where we're at right now. The buyer's obviously defending this trend line somewhat. If they lose it here, the market's gonna head lower. If they can hold on to it, we should see an attempt to retest the highs. I'm going with tighter stops today, I think. Okay, so here's another red bar buy signal. This is currently against the ATR, however. Yeah, absolutely. Tony says, can we have a look at the crude inventory report? And Eric, are you trading the March contract? I am, Tony. I'm following March in crude oil. Now, I'm just picking up the Falcon here. You can use any of the birds that you want, but what we're looking for when we're going into the inventory report, which will be at the top of the hour, is a well-defined range. A swing high and a swing low, and Tony says I'm not getting any data. I think they're just moving really slow. They haven't decided yet which way they want to go. So if the market holds here, we're going to have a pretty decent area to place our OCO order. We're looking to buy above here and sell below here. That's very, very cozy for a market like crude oil. And yet, that seems to be the way it's shaping up. Maybe I'll use the support and resistance lines and enter up here closer to 29 and sell down here around 28.30. Not liking all this sideways drifting, no momentum sort of stuff. We'll take a look at this again in a couple of minutes though, as we get closer to the top of the hour. And it looks like the eagle did fill our buy signal. Now, if I were using this second red bar buy signal, my buy would actually be above the high of this bar. This becomes our signal bar because this is the one that has tripped the ATR and flipped it over. All right, come on, get up there. So I'm going to go with a more aggressive bar high low. I might give them an extra bar. Doggone it, I didn't want it in that tight. Didn't give me a chance to adjust my stops any. Oh well, my fault for placing the trade too tight. Let's try it again. We're going to take it off of this signal here. I got a little bit too quick with my stop on that. There we go, that's the one I wanted. So what I'm doing is I'm just going to try to simulate this order here. I don't recommend that you go chasing old orders, but just for the sake of demonstration, I'm going to try to simulate what our order was like if I didn't choose the wrong stop strategy. There we go. There we go. That's what I wanted. Didn't want to get all that quick with my stops. Okay, now you see how I'm just hovering one tick from my break even? I'm okay forcing the trade to break even. For the sake of one tick, that's close enough. If they reverse from here and take me out of break even now, so be it. But, or even if I choose to take the profit, you know, we've got a big chunk of change sitting there right now. But I'll try to be patient and hopefully they won't reach too far back. actually get me to my profit objective. Good. Hooray. Hooray for us. So that was a better structured trade. It had a little bit more going for it. Certainly the trend line, whenever you can get a signal bouncing off of a trend line, that should add some confidence to your signal. So hooray for us. All right, and they're continuing to move a little bit higher. Let's get, oh no, we're still a little early for crude inventory, but we will check it out in a few more minutes here. The buyer is definitely the stronger of the two forces today. All right, just again, they're starting to drift sideways somewhat. Here's the top end of this short-term range. There's the bottom end, and you can see this is where we are. Near the top end again, drifting a little, perhaps retesting the high. Momentum definitely seems to be going a little bit sideways though, doesn't it? Rhetorical question, I suppose. We might, oh, here's a soft edge sell already creeping into the Raptor. I was a little late on that one, but expect that to come down here to the hard edge. And while that's doing its thing, let's get crude oil back over here. And we'll play with crude oil. We're going to hit the OCO function, and I'm going to enter above the second resistance line. I'm going to sell below. Remember, these orders are live the moment you put them on your charts, so you don't want them too close to the current price activity. And I'm going to dial back the ATR. And we're going to have a stop strategy in play also. All right, so a few minutes more, and notice the Raptors soft edge sell goes into the hard edge. That's always our first target when we're looking at the soft edge sell signal. All right, just waiting. All right, what time is it? Okay, we've still got about 5-6 minutes. All right, crude still seems to be drifting sideways. I've been watching the NASDAQ on my other monitor also, and they too are drifting sideways. So it could be a little while before we get another signal out of them. But we'll just wait patiently for crude oil, which the inventory report should be coming out in a couple of minutes. All right, here we go. They're warming up. Very often with crude oil, you'll see them try to do a little head fake going into the inventory. So we've got about a minute or so still before the inventory release. What's going on here with the NASDAQ? Yeah, the NASDAQ's starting to turn over. I would be interested in a little bit of a pullback here into the hard edge, either on the Raptor or the Eagle, and a possible sell signal coming out of that. All right, here we go. Okay, the release should be hitting the floor any moment now. We'll know because the market will probably be going nuts. I'm not real happy about it hovering this close to the support zone. I tend to like to see the support or the market bracket itself and prices trade right in the middle somewhere before the report is released. All right, so here they are. They're just, oh, another nice solid bounce off of the median line. Are they going to break? Are they really going to head below $28 a barrel again? Well, here they come. Holding my breath. Well, come on. The crude inventory report, obviously not very remarkable. What you could do is you could actually roll your buy stop in above the primary resistance as well. And now we've got the market bracketed this way. Well, I'll tell you what, folks, what are we, about 2, 3 minutes after the report release now? I'm reluctant to take the signal. I'll let the signal play out just because, we're in the trade room and that's a luxury that I have. I'd like my stop down here. But the signal's getting stale. There's obviously no momentum in the marketplace right now, or less momentum in the marketplace. If we get them to swing up here, I'm going to get very aggressive with my bar high-low strategy. And what have we got in open profit? Yeah, I'm tempted just to take the profit that we have, especially as we get up here toward the highs. We've only got $10 or $20 at risk right now. But it's the type of trade where, like I said, there's not much momentum here. So if you're in this trade and you're up $100 or something, then by all means, just take it. Take the money. There we go. So we hit the break-even trigger. I doubt very much we're going to, actually the secondary resistance is closer than I thought. I was going to say I doubt very much we'll meet the next secondary resistance line, but we are pretty close, so it may happen yet. In fact, I might use that as a profit target. Here we go. These nice long tails are very encouraging. And we might protect a little more profit still. There we go. Come on, get up there. There we are. All right. Well, that worked out to be not too bad of a trade, even though the market was very reluctant to get going on that. All right, you guys, I think we're going to call it a day. Well, we'll be back Friday. Hopefully the market will slow down a little bit so we can keep up. All right, we'll talk to you then. Bye for now.